What's up everybody? Welcome to the Stocks channel. My name is Corey and today we'll do weekly technical analysis and we'll look at weekly charts of all of the indices, the VIX and Bitcoin. So first up, let's take a look at a weekly chart of the SPX S&P 500 index. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did have another bloody week in the SPX and you can see on the weekly chart we did gap down and we also closed near the bottom of the week. So we're clearly in a downtrend in this bear market and we're starting to close below our support channel trend line, and we did also get the weekly close below 3,700, which is our support trend line that we want to be cautious of a lot more downside if we start closing below that level. So one weekly close below 3,700 is definitely a warning sign, and from here we do have some downside price targets that we will want to pay attention to. The first one is going to be this 200 simple moving average on the weekly chart, which brings us down to SPX 3,500, and if we zoom out, that is typically going to be a support level that we will want to pay attention to as price action comes into that level. In 2020 we sliced right through it, but that was a stock market crash, and this is more of a stair-stepping down bear market, which means we should have more opportunity for bounces along the way, which of course we've already seen throughout the year. So these are called bear market counter trend relief rallies, and you are going to get quite a few of them during any bear market as long as you don't start getting into an environment where you crash straight down. So SPX below 3,700 is going to increase the probability we're coming down at 3,500, and I still would watch this previous high, which is right around 3,588. Now if for whatever reason we slice right down through 3,500, I would instantly start looking for a retest of this low right around 3,260, because that is likely where we are going if we don't hold support at 3,500. Now one more thing to keep in mind is that we are getting extremely bearish and fearful sentiment readings once again, and since we did gap down, there is going to be the real possibility that we are due for this counter trend rally in the short term, which could easily take us back up to fill this gap at SPX levels of 3,900. So while we are in a bear market, you could never completely rule out the bear market relief rallies, which means we could get a counter trend rally to close this gap and possibly even retest the 4,000 range or even higher around 4,100 before we ever make any more legs lower. Now also keep in mind that eventually all bear markets do come to an end. They eventually reach what is going to be the bottom, and then you will see the price action reversing, but we will not know that bottom is in until we see price action forming higher highs and higher lows. So as a long-term investor, you can accumulate at these levels, but you have no idea where the bottom is, so you have to be comfortable continuing to buy the lower we go. Otherwise, you should just wait for confirmation that the bottom is in, which we could be multiple months away from knowing that. Now, as a trader, you always need to use proper risk management and you need to know where your risk levels are. So right now, the number one risk level on SPX is going to be 3,700. It's risk off below 3,700 because we're likely heading to 3,500, and you can start getting a little more risk on above 3,700 for the potential to fill that gap at 3,900. But this is clearly a downtrend, so you should not be getting overly bullish as a trader during a downtrend. And if you are taking long trades from your risk levels, make sure you don't get overly greedy on how long you're holding long positions. Lock those profits and move on because this market is clearly trending lower. So if we jump over to the bear bull survey, you can see that we're back to extreme bearish sentiment with over 58% of the people that are now bearish, and this is starting to get into those extreme readings that could lead to that counter trend bear market relief rally. Now it's possible we continue to see this reading as we go lower, so there's no magic here when you're looking at sentiment, but it is something to be aware of that there is a lot of people that are stacking up to the sell side, sitting in the bear camp, and that is the perfect recipe for the market to reverse and cause the most pain possible. Remember, the market likes to hurt the most people, so if the most people are starting to get bearish, that could be a great time for the market to start to rally. You can also see on the fear and greed index that we're back down to extreme fear readings, sitting at a reading of 14, and typically this does tell you you are due for a rally in the short term as well. This doesn't mean the bear market is over, and this doesn't mean we're going back into a bull market. It just means be a little more cautious in the short term if you're bearish, because we may get a bounce before we go any lower. So on the SPX, keep in mind as we come down into this level below 3,700 and we start getting into this strong support zone right around 3,500, you will want to get a lot less bearish because it's very possible we do get a counter trend rally off those levels. Now there's no guarantee we even have to go to 3,500, but it is increasingly more likely below 3,700. So continue to use that level at 3,700 as your risk level and be a lot more cautious below that because we could continue to go lower towards that 200 simple moving average. Now another thing to pay attention to is that oil got absolutely slammed this week, but it is still above our support trend line in this bull market. If oil continues to roll over and comes back down to support at 98 and slices right down through that level, that could start to tell us that inflation may have peaked, and that could be a very bullish indication for the market. So if you look at CPI data month after month, a lot of that is being driven by oil prices, food prices, and rent prices. And if these oil prices can start to come down, that will give some relief from the inflation. So if you want an early way to see whether or not the CPI data is going to tick down at the end of the month in June, go to this chart of the oil futures and see if the month of June closed red. We can see that CPI data has been ticking up, and so has the oil prices month over month. So if we get a red candle for the month of June, that could be evidence that the CPI data is going to tick lower, and that actually could lead to a short-term rally in the stock market. So don't get overly bearish if we start to see oil prices rolling over. That will be bullish for the market as a whole, and that could tell us that inflation is very close to reaching a peak. And if we see that inflation rolling over, that will be bullish for the stock market. On the NDX weekly chart, we can see another bearish week closing below the support channel trendline and getting very close to our 200 simple moving average, which is going to be right around 10,800. If we slice right through that support level, it's very likely that we could start coming back down to the previous high, which is going to be right around 10,000 to about 9,600. I know these are very low prices, but when you're in a bear market, there is no reason we can't continue to trend lower. So if we lose this support zone at the 200 simple moving average on the weekly chart, do keep in mind there is nothing that says where the bottom has to be. It's going to be a downtrend until it's not, and we don't know when that's going to be until price action reverses. And this is very clearly still a very strong downtrend. So while I do think it's very likely we at least get a bounce off that level, the next gap close resistance level is up here right around 11,832, and we could easily just fill that gap and continue to trend lower. If we break back above that gap, look for the retest of the high right around 12,697. And if we start closing above that level, that will be bullish price action, but we still do have strong resistance up there at 13,307. So a lot of these 200 simple moving averages on the weekly chart do look like they're very close to being tested as support. So it could be possible we have a little more downside to test those levels before we go any higher, or we are going to bounce and close the gap and then go down to those support zones. And there's always going to be the possibility we don't hit those levels at all. But because we are in such a strong downtrend, I would continue to look for lower price targets until we see a reversal in price action. On the Dow Jones weekly chart, we also gap down and close near the low of the week. And we're also getting very close to the 200 simple moving average on the weekly chart, which is just above 29,300. We're also sitting right on top of the 38% retracement at 29,794. And if we continue lower below the 200 simple moving average, there is a gap to fill down here right around 28,500. So those are two critical downside price targets if we do slice down through this support that we're currently sitting on. And we do have that gap to fill up there at 31,392. So a lot of these indices gap down and close near the low of the week. So that could be evidence that the sellers are getting exhausted. And these gaps are a seller exhaustion gap, which need to be filled before we go any lower. But as you can see in the Dow Jones, we clearly do have a gap to the downside as well. So remember, as long as we're in downtrends, you want to be looking for lower price targets. And if we do bounce, you're looking for the possibility it's just a lower high before the next lower low. If we start getting price action that forms higher highs and higher lows, then we can start getting more bullish, but we won't be able to say the downtrend is over until we get confirmation with price action. So don't bother trying to call a bottom, even though I'm giving you support levels to pay attention to. There is no guarantee that those could be the bottom. We could bounce from them and then continue to trend lower to lower prices yet again. On the Russell 2000 weekly chart, we also gap down and close near the low of the week. And the Russell 2000 is right back down to the bottom of the support channel, and we have not yet closed below that level. The next downside price target, if we continue to trend lower, is down here at 1578. And if we break back over the 200 weekly moving average, we'll very likely fill that gap at 1792. To get bullish, we need to break all the way back above about 1890. So there's a long ways to go for the bulls to prove that they've reversed the downtrend and scare away the bears. You can clearly see the Russell 2000 did bounce off the 200 simple moving average on the weekly chart. So that is definitely why we're expecting to see something similar on the rest of the indices. And there's a lot of price action evidence in the past that has been a strong support. So while the Russell 2000 is already below that level, it is sitting at support at the bottom of the trendline channel. So we could see a bounce going into next week, especially to fill the gap above. So don't rule that out as a possibility that we need that counter trend relief rally soon. On the VIX, we printed somewhat of a doji looking candle on the weekly chart, but the only thing that matters right now is that the VIX is still elevated above 30, which is still a very volatile bear market. In order to see the VIX starting to show some bullish signals, we need to get a crush all the way back down below 24. and it's still going to be a very volatile market as long as the VIX is above 24 and definitely while the VIX is above 30. If we do get a full-blown capitulation, that could mark the bottom in the market, at least for a few months, and that will likely mean the VIX is going to spike up to 38 or possibly even higher. So definitely pay attention to see if the VIX gets that high, because that could be a tradable bottom for at least the next quarter. On Bitcoin's weekly chart, we're currently sitting right on top of that support zone at 20,000. And if we lose that support zone at 20,000, we are very likely going to see Bitcoin at $12,000 once again. I do think 20,000 is going to be a very strong support, so I don't expect to see Bitcoin slicing right through it, but you can never completely rule it out. And you can see that Bitcoin is trading below the 200 simple moving average on this weekly chart. If we bounce from 20,000, look for strong resistance at 28,000 and our resistance trend line right around 34,000. If at any point Bitcoin can break back over 36,000, that will be bullish, but that is a long ways away and we are still in a very strong bear market and a very strong downtrend. On the ARKK ETF, we are clearly still well below our support trend line, and we are not getting bullish on this ETF until it can get consecutive closes above $50. And it is more than likely trying to trend down towards this low right around $33. So stay away from this ETF as a bull until it starts getting bullish price action, because it still could be going much lower, and this is not an ETF that has any reason to go higher, so make the price action prove it. So jumping back over the S&P 500, this is definitely looking like a very weak market while SPX is below 3,700, but we could have very strong support just a little bit lower down here right around 3,500. So be very cautious if you're continuing to short this market to get a lot less bearish as we reach that level at 3,500, and that could lead to a very strong bounce in the indices. Also, don't forget we do have gaps to fill across all of the weekly charts on all of the indices, so there is the possibility we're due for a bear market relief rally before we go any lower. So watch those gaps to the upside if we do see SPX breaking back above 3,700. Remember, as a trader, you have to have great risk management in this volatile bear market. Even if you're shorting, there's still the possibility of strong counter trend rallies. As an investor, just know where you want to accumulate your long positions and just be prepared to continue to buy lower, because nobody knows where the bottom is. And in the worst case scenario, we could come all the way back down to the March 2020 lows. Even though I don't think that is going to happen, you can never completely rule it out. More than likely, we'll find strong support right around 3,500 to 3,200. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.